Good evening, President, guests, and fellow Toastmasters. Okay, today, like the rest of the other speakers, I'll be presenting a pecha kucha presentation, and I'll be doing Project 9, Persuade with Power, and I'll be sharing with all of us the importance of savings, not in your piggy bank at home, not in the bank, but in the correct savings instrument. So, how many of you actually put your savings in the bank, savings account? Okay, it's a misconception actually. It's actually a spending account, not a saving account. Why? Because do we see more ATM or do we see more deposit machines? Do we see them promoting credit cards more or saving plans more? So, what is actually true saving? In the bank, when we get our salary or allowance, we have it, but when we see something we like, we spend it due to the convenience of ATMs, credit cards and debit cards. At the end of the day, we realize that we are almost left with little or no savings. How many of us are guilty with that? Yeah. So the right way to save is actually, no matter how much we earn or spend, we should always have a consistent small amount so that we'll reach our savings goal. That's why my little cousin who saves 20 cents a day have more savings than his brother who always spends on game cards. So however, in this day and time, even if you were to save consistently in a bank, the bank interest is so low, only at 0.05%. So even if you were to save for 25 years, we'll only have interest of $500. That's pathetic. Is that a lot actually? No, that's actually very little. So saving in a 3% savings plan, if you were to do it the same way, what we'll be having is actually $30,000 compound interest at 3%. So in other words, for every dollar we put in, we get back 50 cents as interest. That's actually 50%. That's not the best part of the plan yet. The best part of the plan is that, let's say if you were to save in a bank, if critical illness were to strike, not only do we have a huge medical fee to pay, also we can't continue to work and save, and we won't be able to reach our savings goal at the end of the day. Whereas, let's say, this savings plan at 3%, not only give us 3%, if the same thing were to happen to us, we'll have a lump sum insurance of 30,000 cover. But today I'm not selling insurance. Okay, what most important is that the savings will continue for us at $200 every month and save for us, save on our behalf, and we'll reach our savings goal at the end of the day. By saving in a bank, even if we don't use our money, the money is actually getting smaller because of inflation. So inflation eats up our savings, and not only that, the savings are not secured. What if we fall ill? Our savings will stop, and we can't reach our savings goal. Right? That's why, be it parents who want to save consistently and securely for their children's education fund, or be it individuals like us who want a higher savings interest rate and also protected savings, this plan is definitely better than saving in the bank's spending account. So high interest, secured savings, the plan is so good, right? Then why don't everybody save in these kind of plans, right? Why people still put in the banks? Yeah, because in the banks, unlike in the banks whereby we can withdraw anytime using ATMs, use our debit card and credit card, this plan we can only withdraw 25 years later. Who thinks it's too long? Yeah, so you are not alone, because due to customer feedback from all of you, this plan now, 70% can actually be withdrawn from the second year onwards. So 70% for indulgence, iPads and all, but 30% it will be inside, forced safe at 3% interest compounded. However, who still think that 25 years is still too long, even though you only need to save 30%? Might be still too long, right? Never mind, let me share with you my friend, Miss Ahok. He's actually 30 years old, older than most of us here, right? So, even for him, see if you all will think that it's still too long. So, Mr. Ahok, he's 30 years old. He told me that he wants to retire at 55. Then I asked him, how long will you, at what age do you think you'll pass away? 75? He said, no. He said, nowadays medical so advanced, even if you want to pass away, we can't. So he might live to 90, we might live to 90. So looking at this, from 30 to 55, it's 25 years. We earn and we spend. But from 55 to 90, he doesn't earn anymore, he retired, so he only spent. You think it's a lot now? No, it's actually too short. Furthermore, when we are older, it's easier to get critical illness. That's why actually saving for 25 years is for him is too short. So looking at this, for this plan, what we should do as when we are young, we should start a small savings plan. And when we are older, we should get another one, in fact, to protect us to older in life. So that at any time in our life, we can have the flexibility of getting the things we want. Marriage, we want to get a new car, or what. But who thinks that 3% is very low? Very low at 3%. Yeah, of course, if we put it in the stock market, we put it in businesses, we can get 10, 20%, or even double, triple our money, right? That's why this plan, I can say for sure, this is not a plan for us to become a millionaire or billionaire. But this savings plan should always be part of our portfolio, so that when we are sick, down with critical illness, when we are not alert enough to invest into stocks, to manage our business, we know that something is still there, saving for us at 3% consistently, right? So the best part of this plan is that there are actually free vouchers when you sign up for a plan like that. Yes, unlike we won't give you fridge magnets or even keychain. We give you the vouchers of your choice. So, wherever you shop, as long as there are vouchers, we will be able to give it to you. Okay. So today, I do not have the luxury of time, but only 6 minutes 40 seconds. I've been in this industry for more than 2 years. So, for any of you who are interested in a savings plan like this, you can contact me via my handphone or just look for me, the one and only Ryan Ng Wen Song, in the entire Facebook. Thank you. Okay.